And welcome to the Aaron Katzman Show. I'm your host, Aaron Katzman. We speak to you about your life, your money, and your investments. And as always, we're coming to you from the spiritual and soon to be financial capital of the world, Jerusalem, Israel. If you like this content, please hit the like button below. If you've not yet done so, please subscribe to both the YouTube channel and to the podcast. And if you think somebody might actually find this of interest, go ahead and hit the share button below and you can share it with them as well. So we've been experiencing extreme market volatility. That's what the headlines read. In layman's terms, the market went down. And then it went back up. And there's a lot of headlines, a lot of news going on there, tariffs and tax cuts and deregulation, whatever the news of the day is. But at the end of the day, nothing really happened in the month of April. Now, why is that important? Because when things drop, you might say, oh my God, now's a great time to buy stocks. The fact of the matter is buying stock, individual stocks I'm talking about, is easy, right? You can always make a case why you should buy a stock. It's lost 15% of its value. It's lost 20% of its value. They've got a great outlook. They had a good earnings call and they raised their profit prognosis for the future. They're in a cutting edge technology and you think they're going to be, the lead movers in that technology, whatever it is. You think they're going to spin off a company, you think they're going to get bought. Hundreds of reasons why one can buy a stock. It's easy to buy stock. What's hard? When to sell a stock. Okay. I've been in this business for 3 decades, over 3 decades. And I've yet to meet the person who really, really knows when to sell a stock. And that's why people like to buy and hold. They don't like to sell stock. They like to buy assets and hold them forever. Because when do you sell, right? It's not easy to sell. I'll be honest, right? As they say in Hebrew, yad al halev, my hand on my heart. I'm not particularly good at selling. There's a laundry list of stocks that I have owned. We have owned, my wife and I have owned for long, long periods of time. And you know what? Decided to sell for whatever reason. And now they're 3 or 4 times higher than they were. It's just not such an easy thing to do because we can't really predict the future. Okay. I came across an interesting article by Ben Carlson who speaks about that, right? He says buying stocks is easy. You might purchase a stock because it's going down and it feels like it represents a wonderful buying opportunity, blah, blah, blah. But then he says selling is a little trickier. Sometimes you sell when stocks are up because you think they cannot possibly go up any further. No one ever went broke taking a profit, right? You don't want to kick yourself for getting too greedy, or sometimes you sell when stocks start going down because you're worried they could fall even further. Selling can lead to some regret if you get out of a position too early or don't sell before a crash. But you can always justify your sell discipline. He says, he continues on, holding is the hardest part because it combines all the feelings and potential regrets that can arise from both buying and selling. Famed investor Howard Marks once wrote, it's not things you buy and sell that make you money, it's the things you hold. Buying is the easy part of buy and hold. Anyone can buy and hope. It's the hold part that's hard. And he continues on. He talks about volatility last year and the year before when markets were great. Easy to do, right? Buy stocks and you make money on it. It's when things start going down, where it becomes much more problematic. It says, no one envisioned 2025 to look like this coming into the year. Investors didn't sign up for a world trade war, but you play the ball where it lies. This is the time when holding on becomes unbearable for certain investors. The noise is cranked up. People are worried. A little bit of panic's setting in. These are the types of market environments where you question your strongly held investment beliefs. He says, I don't know what's going to happen, but I do know that abandoning your investment philosophy is not going to help matters. Okay? I would look at things completely differently. Okay? And he goes on, he quotes Warren Buffett and blah, blah, blah. He says, finally, here's what I know when it comes to investing in stocks. We know that stocks are the best asset class for generating long-term returns that exceed inflation. We know that stocks occasionally exhibit bone-crushing volatility. We know that on average, stocks fall by 5%, roughly 2 or 3 times per year. We know that on average, stocks fall by 10% roughly once every 1 or 2 years. And we know that on average, stocks fall by 20% or more, roughly once every 4 to 5 years. Great. So great. I just laid out in a second, right, what the issue is for investors. What I would say is this is another in a long line of reasons that I have presented over the years that one should probably stick to investing in indices. And then buying and holding becomes much, much easier. You don't have to worry. You don't have to have your finger on the pulse of earnings, earnings reports every quarter, what's going on in a certain industry. It's just hard. It's hard enough just to buy something and know what to do with it over the long term, right? But if you bought like Kodak, or I don't know, some company which has basically, become obsolete because nobody uses cameras anymore, right? Well, it sort of stinks that you bought and held that company. Whereas if you just bought the index, it's like I've said over and over again, right? You're always keeping up with the cutting edge with the stocks which are doing well, because by definition, they rise to the top in the index, especially when you're talking about market-weighted indices, right? Where the have-beens slowly start falling out and they go somewhere else. They go the dust heap of history, as we like to say, right? So if you don't want to have that, there's enough anxiety with market volatility, watching your portfolio drop by 20%, right, over the course of a month, and then watching it ramp right back up, right? That's hard enough on the stomach. But to actually have to sit and analyze, well, should I keep this stock? Should I not keep the stock? Should I keep it for another quarter? Should I not keep it another quarter? Should I keep it through this earnings report, or should I sell it today? What's the answer to that? I don't know, right? People ask me that all the time. And my answer usually is, I don't know. Sounds good. What do I know? I know it's going to be in the future. There's no way for me to know, but I do trust the process. I do know that over time, I'm pretty confident, right, that over time, markets tend to do well. And I know that if I'm then investing in indices, I'm pretty much, especially broad-based, chocolate vanilla kind of indices, I should be okay. When I build a portfolio of many, many stocks, or not so many stocks, right? If I've built a portfolio of like 40 stocks, chances are I'm going to be covered, right? I'm not going to be too far off the index if I'm diversifying, right? If I put all my money into tech, well, then it is what it is. Or put all my money into railroads or whatever it is what it is. But if you spread across many, many different industries, you should more or less, probably less, but still be okay vis-a-vis the index. But when you've got a handful of stocks, then you really need to keep your hand on the pulse. And that's not an easy thing to do. And it's never an easy thing to determine when you should sell. Just not. So for most of you out there, do yourself a favor. Stick to investing in indices. It makes life a lot easier and probably a lot more profitable. You've been tuning into the Aaron Katzman Show. We speak about your money, your life, and your investments. If you like this content, please hit the like button below. If you've not yet done so, please subscribe to both the YouTube channel and to the podcast. And if you think somebody might actually find this interesting, go ahead and share it with them as well. Thanks so much for tuning in, and we'll speak to you soon.